Welcome to my weekly market roundup, 13th September 2020. I am Sagar Nandi. I used to work in IT. I have retired now. I am swing trading stocks using Q systems and techniques. This is my email ID tradingprofitably@gmail.com, my traders forum sagarnandi.com, YouTube channel Trading Profitably, and my Twitter handle Sagarnandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. By the way, please let me know using the YouTube live channel if you can hear me and see my screen. I hope so. I will continue. This is the weekly market roundup where I will have a look at the two commodities, oil and gold, and then carry out a 360 degrees analysis covering the market, sectors, industries, and stocks. Thank you, Mike. These are the systems I use in my trading. I use Q Elite on TradeStation and Q Global and Finder on MetaStock for technical analysis, charting, and scanning. For fundamental analysis, I use Q Vital. For sector industry rotation analysis, Q Edge, and market level index analysis, Q Index. That was the last slide of my presentation. I will continue with the live system. I tried to have a look at the global markets, but again, it seems the global indices or even the American stocks are not opening on MetaStock right now, at least not on my computer. So I will skip the global markets and go directly to the oil ETF USO. I am using Q Elite now on TradeStation, looking at the oil ETF USO using the weekly backdrop template on the left and daily entry template on the right. Together I call this at a glance template. In the weekly, after moving inside narrow range, oil fell for 2 weeks. However, this week has a doji candle, very indecisive candle. In the daily, after being inside a range, it dropped. For the last 4 days, it again moved sideways. That gave rise to the doji in the weekly chart. Because it has already dropped for several days, the stretch indicator is showing that it is oversold. Oversold in the daily chart for several days, and it is now oversold in the weekly chart also. In the daily, it is below lower boundary. It is bearish both in the weekly as well as in the daily chart, however oversold. Therefore, I am not going to take any trade right now. If USO can recover somewhat and then goes down again, that may give a go with flow trend following shorting opportunity. Gold ETF GLD. Earlier gold rallied, moved sideways, rallied again, and then for 1, 2, 3, 4, 5 weeks. 5 weeks it slowly came down. The weekly backdrop color is bearish now. Backdrop color is bearish for 2 weeks. However, this week's candle shape is indecisive. Hollow body, that is bullish, upper tail, that is bearish. Overall, the candle shape is indecisive. In the daily chart, after displaying the bearish headwind, it dropped, and after that it is moving sideways, creating a triangle pattern, supported by memory support, bound by memory resistance. It is near the memory support now. Usually I like to buy an instrument near memory support. However, it is also very close to the memory resistance. Therefore, unless gold can break out of this triangle pattern, I am not going to consider taking any swing trade. Oil was bearish but oversold, and gold is moving sideways. What about the market ETFs? I have put the market ETFs here using the weekly as well as the daily interval. QQQ used to be the strongest, and this week QQQ was the weakest. That dropped by more than 4.6%. And the best performer DIA also dropped by 1.6%. That was for the weekly interval. And for the daily interval, that is for Friday, QQQ again it declined. Russell 2000 also declined. On Friday, SPY was almost unchanged, went up by 0.05%, you may say unchanged, and DIA is the only one that went up somewhat on Friday by 0.47%. The week was bearish, as we can see from the percentage changes, and Friday was mixed. If we look at the leading stocks, I will look at the charts shortly, but let's have a look at the percentage change of the leading stocks. They were going up and up and up. And just last week, when looking at Tesla, I mentioned that Tesla is not a rocket. It is moving up like a rocket, as if it is a rocket, but it is not a rocket. So we expect it to fall down. I was not going to short Tesla. However, I anticipated a drop, and that came true. It is the worst performer among the FANG stocks for the week, came down by minus 10.9%. The best performer of the FANG stocks is Google, but that also came down by minus 4.1%. Apple came down by 7.4%, Netflix by 6.5%. That was for the week. And for Friday, Tesla went up little bit, Netflix went up little bit. The other stocks, Facebook, Google, Apple, Amazon, all dropped. Not by big percentage like 3%, but still they drop. Again, the week was bearish, very, very bearish for the FANG stocks. Friday was somewhat mixed, but more bearish than bullish. It is showing bearishness, but is there a trade setup? We saw oil is looking bearish, but it is oversold. Let's look at the market ETFs charts now, starting with SPY. In the weekly, it displayed an indecisive shape candle at the top, then it dropped. The backdrop color changed to magenta, bearish. However, the shape is again indecisive. In the daily, after going up sharply, it dropped, and then you may say moved sideways for 4 days. Neither went up or down. And Friday ended with an indecisive shape candle. the tail is actually longer than the size of the body. It is bearish because the backdrop color is also bearish and traffic light color in the daily chart is also bearish. However, it has dropped already for a number of days, and I will not be surprised if it goes up at least a little bit on Monday. But even if that happens, it's not going to give me any swing trade using the standard Q trade setups. Therefore, looking at SPY, my conclusion is same as was for USO. I'm not going to try either bullish or bearish trades. QQQ, very similar picture. 1 week ago, indecisive shape candle. This week also somewhat indecisive, has both lower as well as upper tails. The backdrop color is bearish. Daily also looking similar. After a drop, it is stabilizing. On Friday, again an indecisive shape candle because it is close to the lower boundary. Though it is bearish, I am not going to try to short it, and there is no long trade setup. If you notice the activity bars, the down days are much more forceful than the up days. There is only one up day, and that day, that green bar doesn't have any dot on the bar, whereas the surrounding 5 bars are all red with dots on it. Therefore, the very high volume days were bearish days, heavy bearish days. And if you look at the weekly chart, previous week and this week both had very high volume that was not there for a long time, since April. That's a long time. From April to now, it's almost middle of August, middle of September, beginning of April to middle of September. Only now we have two high activity weekly bars, and both of them are bearish. But still, there is no short trade setup because it is already close to the lower boundary. Dia, very similar picture. 1 week ago, indecisive shape candle. This week is also indecisive shape. Color is bearish. Very similar to SPY, very similar to QQQ. Only in this case, daily has a memory trendline support also. If you look at the activity bars, it is not as bearish in recent days and weeks as QQQ. That shows that tech stocks were sold heavily. Traffic light color is bearish, backdrop is also bearish, so I'm not going to buy it. And there is a memory trendline support, so I'm not going to short it as well. The last market ETF we study, IWM, this was weaker than the others. And if you are following my live sessions, YouTube live sessions, you know I mentioned that this was the only ETF, and this is the only ETF which has memory resistance both in weekly as well as daily charts. And looking at that, though QQQ was falling sharply, more sharply than other ETFs, I actually took some day trades in IWM, and those were very profitable. Now the weekly is bearish, daily is also bearish. Friday's candle is indecisive near lower boundary, so I'm not going to try long or short any swing trade. Here the daily bars in recent days are more bearish. However, the weekly bars are not so heavy volume weeks. together the ETFs are looking bearish but oversold for my trading style. So I'm going to wait patiently to see what happens next week. Now let's look at the leading stocks. Tesla, it fell sharply, however the uptrend is intact. By the way, for all the market ETFs also uptrend was intact except IWM. Let's have a quick look again at them. IWM has memory resistance in weekly daily and no memory support. In the daily it is, you may say, is having lower high, lower low. So for swing trading purpose it is in a downtrend for short term trading. Whereas the other ones, we cannot say it has lower high, lower low. So SPY, that was SPY, QQQ, and DIA had memory support. So none of them are technically in a downtrend, market ETFs, except IWM. And though Tesla, coming back to Tesla, though Tesla dropped sharply, it is just a swing in the uptrend. And for last 3 days, you may say it recovered. The weekly is very indecisive. Last week, actually last 2 weeks were indecisive. This week is also indecisive. In shape, backdrop color is bearish. Daily has memory support. Therefore, even if Tesla drops next week, I'm not going to try to short it. If it goes up, there is no buy setup. No immediate buy setup may come next week. So I am going to wait. Netflix. This is not in an uptrend anymore. Here it broke below weekly memory support as well as daily memory support. Therefore, we can see that it is weaker than the market ETFs. It is weaker than Tesla. It broke below memory support in weekly, daily both. There is no shorting opportunity because traffic light is red for several days now. 1, 2, 3, 4, 5, 6 days. So oversold. The reasonable stop will be very far away. In such cases, my preference is for the stock to go up, preferably to the memory support that may act as resistance now. Not only the watermark supports can turn into resistance, the memory supports can also turn into resistance. Therefore, if Netflix goes up and then reverses right from the memory support, earlier that was memory support, then that may give a very low risk go with flow shorting opportunity. Facebook, here it has not come down below memory support. Therefore, it is more likely it will go up next week. If the weekly hits the memory support and then goes up, that will probably give a very low risk, extremely low risk buying opportunity using intraday chart. I see that in the daily chart there is no heavy volume in recent days. There is no pressure also, neither bearish nor bullish. Therefore, even if it bounces up from the memory support, the Q checklist conditions for bounce setup will not be met. Therefore, I may not take any long position using daily weekly interval, but if, and especially if it comes to the weekly support, at which point probably it will come to this memory support in daily. If those supports hold and price starts to go up, then I may look for a buying opportunity using fine-tuned chart. That will give me extremely low risk buying opportunity. Google, here also it broke below memory support in weekly. after displaying a bearish headwind signal in the weekly, this week is again indecisive. In the daily, it dropped for several days. 6 days, traffic light color was red. Friday's candle shape is indecisive. Because it dropped for 6 days already, I'm not going to try any shorting in Google, and because traffic and backdrop both are bearish, I'm not going to buy it also. Apple, same thing. After displaying the bearish headwind, it dropped for 6 days again. Traffic light color is red, backdrop is bearish in color, weekly candle shape is indecisive. It has a memory support. That support held nicely on this day and then again on Friday. Initially, Apple tried to go below the memory support, but it held nicely. Next week, if it goes up, if the market goes up, it is possible to try to take a long position using fine-tune chart. Again, I don't see heavy activity is there. If it goes up from the memory support line, it may give a bounce long trade setup. Why I say that? Because on this day, the memory price level held nicely, and that was very high activity day. So those buyers may still be there. So far, they are able to hold on to their price level. If on Monday price starts to go up, especially if the market also goes up with that, then it may give a low risk buying opportunity using fine-tune intraday chart. And sometimes in the beginning, the market may drop. If Apple also drops with that and then starts to reverse, that may give even better buying opportunity. Meaning, even if price drops in the beginning on Monday, but then reverses and starts to go above the daily memory support, then we may buy it using fine-tune chart and put stop just below the day's low. We'll use the fine-tune 5-minute chart for that. Those are very low risk buying opportunities. Amazon, this also displayed a bearish headwind, this time in the weekly chart, then drop. Here we have the weekly shape as bearish, unlike the other FANG stocks. Backdrop is also bearish. Daily is also bearish in color. However, here also we have memory support like Apple. Therefore, I'm not going to consider buying it. Not consider shorting it. It may be used to take a long trade using fine-tune chart. However, Apple seems to be better. Why? Because if you look at the weekly candle here, the shape is very bearish. And if I go back to Apple, it is bearish. Okay, bearish, but little bit less bearish, you may say. Though they are in different industries, we may check out their fundamental side by side, and I'm using Q Vital now. I'm not doing root stock peer analysis. Instead, I'm going to just type the two stocks. Cannot do peer analysis because they are in different industries. Is retrieving the data done? Stock score calculation is done. Okay. Now, if we look at valuation, then Amazon has a better valuation. In fact, Amazon has better earnings growth also in the last quarter. Revenue growth also. Only in terms of dividend, which is not that important for swing trading, Apple is better. both has robust earnings quality. None of them has a short squeeze potential. Therefore, fundamentally, Amazon is looking better. Of course, they are in very different industries. This comparison is not exactly accurate. We usually don't use two stocks from different industries and compare them. Cannot rely on that. Strictly speaking, I cannot say Amazon is stronger than Apple based on this scorecard because they are in very different industries. But keeping that in mind, we still want to look at the scorecard, then Amazon is stronger. However, technically, Apple looks slightly stronger than Amazon. For short-term trading, technicals are more important, especially when we are talking about fine-tuned chart, 5-minute interval chart, then technicals are more important than fundamentals. Therefore, if I am, for now if I have to decide which one I will use to take an intraday long position on Monday if the market goes up and the stocks go up from their respective memory support lines, then currently my preference is Apple. Therefore, what I will do on Monday, if that is my view, I may put Apple in one fine-tuned chart, Amazon in another fine-tuned chart, and because I have two more panels left, I may keep SPY and QQQ on them. And if I see, especially if QQQ is going up, then I will keep an eye. Is Apple going up first or Amazon going up first, and which one of these two stocks is giving a proper low risk entry setup using this fine-tuned chart? And I may decide in that way. And if I see that instead of going up, the market is actually coming down on Monday, then I will not try to buy any of these two stocks because market is looking weak. If market goes up, I may try a very low risk entry opportunity in Apple. One reason, of course, for choosing Apple over Amazon is the stock price is easier to handle. It's $112 stock, whereas Amazon is more than $3,000 stock. So for me, Apple has had a split recently, so Apple is much easier to handle for me. That is a look at the market ETFs and also the leading stocks. All of them are looking weak. However, several of them are near trendline support, and all of them are also oversold, dropped for 6 days. Traffic color is red for 6 days. So I'm reluctant to short any of the market ETFs or any of the leading stocks. It is looking bearish, but too oversold for me to short now. And because it is bearish, no buying opportunity for swing trading. Now let's look at some of the charts that I put together from Keywedge. This is a picture from 1 week ago. I like to compare the picture from 1 week ago to this week. And this picture compares current week's sector performance with previous week. The current week sector performance shown by red bars, previous weeks by green bars, and this is from 1 week ago. At that time, from a bullish position, 10 sectors up, 1 down, it changed to a bearish mode. 2 sectors only up, 9 down. Red bars were much more to the left side. And 1 week ago before that, it was more bullish. So 1 week ago, the sectors turned bearish, from bullish to bearish. And this week is even more bearish. So it didn't flip-flop from bullish to bearish. It didn't turn back to bullish. It became even more bearish at the sector level. 1 week ago, 4 sectors were up, 7 were down, and this week, and strictly speaking, it is not only this week because there was a Labor Day holiday. This is running 5 days. So over last 5 days, all the sectors are down. On Friday, we saw that the market ETFs were indecisive and sectors were still bearish. Not all sectors went down, but 8 went down and 3 went up. Which ones went up? Financials, industrials, and materials. Now, these sectors had tried to go up in recent weeks also, but didn't go up much, especially financials. I analyzed it in several earlier live sessions also, and I made some profit buying some banking stocks, and then I was ready to buy them again, but that up move didn't materialize. I was keeping an eye on some of the financial stocks and ETFs. If you look at KRE, the regional banks ETF, earlier I mentioned it had memory support in weekly, daily both. If I change the daily template to the one that shows the historical memories, you can see there were daily memory support and the weekly support is still being shown. So I was hoping to buy, expecting to buy if price went up and closed with a bullish shape candle. That is my usual technique when price is moving sideways in a range, and in this case in a triangle. I try to buy at the lower edge of the range using a bullish shape, hopefully bullish color or at least neutral color candle. Could I buy any of these days? No. These last 4 days all were bearish color. Friday was indecisive. Prior to that, all the 3 candles were bearish shape also, or indecisive. You may say this is also indecisive. But none of the shapes were bullish. The colors were also neither yellow nor green. Therefore, I couldn't buy on any of these days. Price didn't bounce up from the memory support. Only day you might consider was this day. However, it closed right below the memory resistance. So it held memory support on this candle. That was a bullish shape, bullish color candle, but because it closed right below memory resistance, that would not be a buy setup using Q technique. And next candle went up, hit the memory resistance precisely and closed with a very bearish shape. So that candle also we were not going to buy. Next one, bullish color but indecisive shape, and again it reversed from the memory resistance. Therefore, if we applied the Q technique, we could be prepared to buy if price held the memory support with a bullish shape, bullish color candle. But we could be prepared. I was prepared, but there was no setup. And I looked at not only KRE, I looked at several banking stocks. For example, WBS, I think WBC or BS. Let's see. Yeah, maybe WBS. It's a banking stock. So it had memory support in daily and weekly. The weekly one is still being shown. And there was no setup again. Only one candle I could consider buying was this yellow color candle. The shape was bullish, it held memory support, color was neutral. That's okay. However, it also was right below the memory resistance. Therefore, I didn't have any buy setup. I looked at some other stocks also, some of the other regional banking stocks, but none of them gave very nice buy setup. And now you see, even if they go up, there is memory resistance nearby. Therefore, though financials went up on Friday, at least on the regional bank side, I didn't see any good buying opportunity. I might have found some buying opportunity in other financials, but not in regional banks. Now let's look at the sectors using Q edge. 5-day, the advanced decline for sectors, industries, stocks all bearish. 100% of sectors, 81% industries, 77% of stocks of S&P 1500. Very bearish picture on the week for 5 days. Over 2 days, it's also bearish. On Friday, it is mixed. Though the sector's advanced decline is showing weakness, if we look at more granular data, industry and stocks both 52%, 52%. Therefore, the picture is mixed on Friday. What about Finder? Very useful tool to look at the balance between bears and bulls using all the important Q signals. Strength signals, trend continuation and reversal signals. I always start with the pie charts. If we look at all the signals over the weekly interval, and this is weekly interval, not rolling 5 days. Weekly interval, all signals very bearish, 85%. Strength signals even more, 94% bearish. Trend continuation signals, 87%. Reversal signal also bearish, 65%. Everything is very bearish, and if you look at the bars, go with flow, that is trending signal, trend following signal, very bearish. The magenta bar is much bigger, much bigger than the cyan bullish signals bar. Breakouts also. Therefore, it seems if the market continues to go down, that will give easier trades, meaning higher probability trades on the bearish side. When I trade, I like to look at the weekly interval first, or maybe second, doesn't matter, but both of them, and as if the stocks are playing their games against the backdrop of weekly. So if weekly is bearish, it may make sense to wait patiently for the daily to turn bearish, and that tends to give very low risk shorting opportunity. So the weekly is bearish. It's difficult to decide on buy trades right now unless we find an extreme reversal buy setup like bounce setup. That will be decided by the daily interval, and the Finder daily is showing mixed picture. This is the daily picture for Finder. All signals mixed, strength signals little bit more bearish than bullish, trend continuation mixed, reversals little bit more bullish than bearish. Therefore, it may make sense to look for reversal trades. That is probably the only kind of trade we may take on the long direction, because the weekly is very bearish. And if we look back again, the trade in Apple that I was explaining, that of course was a setup using fine-tuned chart, but on the long side, that is conforming to this discussion, that if at all we are going to buy something next week based on this higher level analysis. Of course, we didn't look at the industries yet. Some industries may be going up, but from this higher level analysis, it may be safer to take those trades that are reversal types, and they may give bounce setup, like Apple, for example. Now why don't we do that? Let's try to find some bounce setup. By the way, in the latest Q Finder, and this is available for download now, you may see the retrieve from Explorer, that is scan on Metastock Q Global. The download button here is moved to the home page. There is no separate button on the bearish tab and bullish tab. Earlier we had to copy the data and remember to put the bearish data into bearish and bullish data into bullish tab. Now we don't need that. We may copy bearish or bullish both data and put it in Finder using the single button on the home page. Let's go to the bullish side. Look for possible bounce setup, putting cursor anywhere on the bounce column and clicking the flag icon. We can see there are several possible bounce setups. Some of them have go with flow signal also. I double click to sort by them, and okay, I see two of them are also possible reversal signals. So let me choose these two first. Because Metastock is not retrieving the data now, let's look at them using QLE translation. NBN, it's a regional bank. The weekly has very nice support. Very nice support, better than KRE, because in KRE the weekly memory is broken, and the other bank that I saw, WBS, there also the weekly memory was broken. But in NBN, Northeast Bank, the weekly memory support is holding. And in daily, it is forming what people may say a wedge. I just use the simple uniform triangle pattern terminology, but you may say it is a wedge. If it breaks out from the wedge, you may also say it's a flag pattern. When we look at charts, some people always find flags, but this seems to be a flag also, valid flag. On Friday, it had very high bullish activity. It closed below the memory resistance. Otherwise, it could give a valid breakout setup on Friday. If it could close, for example, at the high of the candle, it could give a breakout setup on Friday itself. But it didn't do that. The weekly memory support is holding on this week after earnings, shown by the dollar symbol. It strongly went up and now it is consolidating just above the yellow direction line. In daily, it is above both yellow and white direction line, and though the tech stocks dropped heavily, even KRE, the regional bank CTF, dropped, broke below the weekly memory support. This one is holding much better. We'll check its fundamental shortly. If it goes up, it may give a breakout long opportunity. That is what, when I was looking at QFinder weekly and the market ETFs, I mentioned it may be easier to profit from shorting, though right now many stocks are oversold. But I also mentioned that we have not looked at the industries yet. Financials went up on Friday. Therefore, if that up move continues, then NBN may be a breakout buying opportunity. It is holding on to its price gain very nicely, considering the recent market weakness, as if nothing happened in the last 3-4 days. Nothing happened, as if it's moving in a narrow range like that. The other one is EXR. This is of course very bullish, but it is too high up in the price pattern for me to buy it near the upper boundary level also. Both of these were reversal setup also on Friday, shown by the green dot here in the band indicator. But if I had to choose, I would choose NBN, the banking stock, because that is giving a lower risk buying opportunity if price goes up next week. And of course, I like to buy if the market also goes up, specifically at least its industry also goes up. But before deciding all that, let's look at its fundamentals. Northeast Bank, I'm clicking the peer analysis button. regional banks. So it is outperforming KRE, the ETF. Let's look at its industry. Industry is improving. Not the best performing industry, but it is improving, and it was weak for a very long time. Base 2 days column is showing some acceleration. Therefore, the industry score is allowing me to buy a stock. Okay, it's retrieving. Meanwhile, let me check out the stocks from QH, many regional banks. Let me see if NBN is here. Search for values. No. So S&P 1500 may not have this stock. No problem. Let QVital calculate the score. I will come back to the QVital. Meanwhile, let me look up some of the other bounce opportunities. Northeast and this one I already saw, so I may delete them. Let me now look at the stocks based on their price performance change. 3 of them went up by more than 2% on Friday. Let me look at them first. HWM. I think HWM was looking nice. So let me look at the others first. Lake. This is apparel and accessories. Weekly has support, however backdrop color is bearish. Weekly candle shape is indecisive. Friday's shape is also indecisive. The color is bullish. It is having support in daily as well as, you may say, the memory support is still there, but there is no buy setup. Especially Friday's candle is not looking so bullish. So what I do when I'm analyzing stocks, be it using Q Finder or using Q Elite, if I don't like something, I delete it. I don't want to keep it for further consideration. Second guess a stock again, I delete it. Look at CPA. This is very bullish on the weekly, and now we can see on the daily both. Weekly is bullish. Daily has memory support. It is at the upper boundary level. However, many traders should not mind buying this. Considering the market weakness, it is holding very nicely. It's an airline. Okay, some people may or may not be interested in buying airlines now. Let me delete it. HWM went up by 4.8% on Friday, and I looked at it earlier. I don't know from where, maybe on Friday. Weekly is again holding support very nicely. Daily is also holding support, but there is a memory resistance. If it breaks out of the memory resistance, it will give a nice breakout setup. Aerospace and defense industry. Now let's keep NBN and HWM. Let's check out NBN's vital score. Fundamentals are not so good. Overvalued and no earnings growth data. But on Friday, regional banks were strong. 72% of the stocks went up. So NBN looked good, but looked good on technical charts, not so much on fundamentals. So let me look at its peer stocks and let me try to find strong fundamental stocks. Recently I saw there was no regional banks with high earnings growth. So I'm not going to look for 3-star candidates. Let me just look for undervalued stocks. Out of them, several went up, but you can see not very strong. Though regional banks relatively is improving, relative score is improving, only one of the undervalued stocks went up by 3%. None of them went up by even 2%. So it's not really strong. We have to see if next week regional bank starts to go up. But let me still have a look at these few stocks that are undervalued and went up by at least 1% on Friday. Again, put them on Q Elite Grid, Trace Station Radar. FHN went up by 3%. Not nice, right? It's looking more like KRE. The weekly color is bearish and there are memory resistance lines. PACW, I was watching it. I mentioned it earlier also, PSCW. Again, the weekly support is still there, but the daily memory resistance could not be broken. There is no buy setup. I think none of them may give a good buy setup. This is looking good. SNV on weekly is looking very nice, but have to wait for the daily memory resistance to be broken. Again, considering the market weakness, this is holding very well. So what I'm going to do, I'm going to delete FHN, PSCW. I keep SNV. Then look at the other stocks. SNV. No, many memory resistances in weekly, daily both. So immediately we know I'm not going to at least even think of buying it. CFG. No, memory resistance. Delete. Weekly is also indecisive. BP. OP. I think OP. BPOP. Backdrop color in weekly and traffic light color in daily both are bearish. So let me delete not that one, but never mind. So I'm left with NBN and SNV. Now I may look at them one after another. This is SNV regional banks. Weekly has nice support. Daily just need to wait for price to break above memory resistance, or using intraday chart may try to buy at the memory support. That is also possible. Just like I explained in case of Apple, if on intraday price chart we see it is going below Monday's memory support level, but then reversing above the memory support, is possible to buy using fine-tune chart, putting stop just below intraday low. And again, I will prefer to see that market is going up. At least regional banks is improving on Monday if I try that. So SNB we may keep in watch list with that technique, precision entry technique in mind. And NBN, this I am more happy to buy. Some people like to buy weaker stocks, but I prefer to buy the stronger ones if two stocks are in the same industry. And NBN is looking stronger technically. Okay, I have to again come back to S&P. Technically, NBN is stronger, but fundamentally, SNV is stronger. On balance, maybe I will, thinking about it again, I may prefer SNV more, especially if it breaks out of the memory resistance. Then I'll be able to align fundamental, technical, and industry strength all together. But NBN's industry will be same as S&P, but the fundamentals are not going to change to bullish fundamentals anytime soon. So with that in mind, I will prefer S&V if both of them are going up. And HWM, this is looking nice in weekly. Again, if it breaks out of the daily, it will give a nice breakout setup. Let's check its fundamentals and HWM, fundamentals and industry strength. While it is doing the retrieval, let me also show one more thing. This is Q Vital and I have all the usual universe of stocks, mid-price stocks with 5-year history, low-price stocks with 5-year history. I calculated scorecard for the mid-price stocks, and if you sort by Friday's performance, you see many stocks actually went up on Friday. If I look for 3-star, that is stocks that are both undervalued and earnings growth, they also went up. Many of them went up by large percentages. This is important to understand that if we just do top-down approach on a particular stock universe like S&P 1500, we may not catch all the nice trading opportunities. It is useful to create a larger list, more diverse list, like I created, for example, one list for mid-price stocks, one list for low-price stocks, and try to find star trading candidates. And you see many of them went up on Friday. If you just look at price performance, let me sort it, refresh it again and sort by price change. I'm looking at Vital. Coming back to the bigger list that I created, many stocks went up on Friday that are having great valuation and earnings growth. So you may carry out that exercise, not just stop at looking at stocks of S&P 1500. Okay, coming back to Vital for the scorecard for HWM. Okay, again the fundamentals not good, valuation is overvalued, earnings growth is also negative. However, technicals were good and the industry was strong on Friday. Unusual because the market was not so strong. And if we check out its industry score relative to others, that is looking much stronger. This is what I noticed earlier, so I had HWM in my mind. If the market goes up, at least this industry goes up on Monday, HWM may be a decent buying opportunity considering the market condition. So coming back to QL8, maybe I will delete NBN. I will keep SNV and HWM in watch list for Monday. That is how I look at stocks and keep it in QL8 radar, and I also keep it on Zenith in the watch list, SNV and HWM. Keeping in Zenith helps me track real-time news on the stocks. If there is any news in real time, there is a pointer. You might have noticed that pointer will come up in this area. And if I see that alert, real-time news alert, I may click on that to see what is the real-time news alert. That's why I put it, all the stocks that I'm going to watch, I put it on Zenith, and also I put it on QLN to track them, and if I have a low risk entry opportunity using fine tune, I may enter that. Okay, now let's conclude my preferred trading direction. Market outlook. Market outlook, not bullish, it is actually bearish. Why? Because the weekly ETFs are all bearish color, though the shape is indecisive. The sectors are bearish, all sectors went down. Q Finder weekly graphs are very bearish. So my overall market outlook is bearish, but overall market outlook bearish doesn't mean I am going to take many shots. In this case, it looks oversold. Several leading stocks, several ETFs, or at least one DIA has memory support. Therefore, I'm not going to short it. If the market recovers somewhat, then the stocks that were holding memory support, like NVN, that bank we saw, or SNV, those may give very low risk buying opportunities. Preferred trading direction? I don't know. I have to see how the market is doing next week. If the market recovers, then I'm more inclined to take long trades, especially in industries like regional banks that were weak for a long time. And there may be some industry rotation happening. If it happens, I'll be happy to buy some regional banks next week. If I will keep an eye on it. No preferred trading decision can I take right now. Let us end today's market roundup. We'll meet again next Tuesday, not Tuesday, sorry, next Wednesday on the market meet, and Wednesday session is run parallelly on Zoom for Q traders and on YouTube live for everybody. So all the Q traders may join on Zoom. We can interact better on Zoom. And this weekend session I like to conduct only on YouTube. It's easier to process the videos in that way. That is all for today. Thanks once again for joining. I look forward to seeing you in our next session. Have a great weekend. Keep safe and trade profitably. Thank you.